Hi everybody, this is Ryan from Loopy Prices. I just watched a video from Danielle Martino. It's really interesting. I think I'm really following what she's saying. I will send and link the video. My studio where my stuff doesn't really have all the fancy dancy stuff that everyone has, like Meet Kevin and everything like that. I'm still starting my YouTube station channel and still trying to get just to show people. So yeah, definitely if you like it, subscribe, thumbs up, share. I really appreciate it, and I'm gonna go over a lot of stuff that I basically got out of her stuff, out of her interview. It was about a 23-minute long interview, and what I'm getting out of it is she's saying that we are in a recession. And I agree. I think that the consumers are in a recession. We are seeing data that's showing that we are in a recession. People are just not spending the money. We have people that are just they're tight with money. They're looking for bargain deals, and they are looking for bargain deals. And if they can't find that bargain deal, and then they're just like not really willing to pardon with that money, they ain't gonna spend it. And even if they want it, this tells me people are afraid and people are tight with money. She's saying that it was this year we have been in recession. We have officially, she's saying we're in officially recession, but the job report, just like I had my last video, the job reports are what's keeping us not in a recession. And she's saying that the reason why is because of the government, a lot of these government branches, and she's putting it as political, I'm sorry to say, but it's political. The left are more left-leaning people are running those government places, and they are wanting to see uh, the economy look good. So they're tweaking it. They're making it look really good. They're making it look really very nice and pretty. And I agree. I think that we seen the job reports. Remember the growth rate in the summertime. We had seen them coming back and adjusting the 800,000 jobs that were opened, and they were saying no, those are wrong. We don't have those jobs. And so now just keep in mind those are 800,000. That's a lot of jobs. That's like almost getting up to a million. You have that many jobs were created out of thin air. They actually got the wrong data. They're thin air. They don't have the right data. And then now they're, oops, sorry. But the market digests this and said, okay, we will understand. We will take it. Everything else is looking great. They are focusing on the Fed. Meanwhile, we should be really focusing on the consumer. And I'm not disagreeing on the market. I'm following what the market's going after, but really the market really should be focusing on the consumer. The consumer is what's pushing us into a recession, what's pushing us into non a recession. We see if the consumer is not spending as much, that means it's going to trickle down that line. So great information. I think it's awesome. I like listening to other opinions. I like listening to other uh, facts onto things. It's not a fact, but what she's putting out is saying she thinks once this the administration, I'm sort of getting out of it. She didn't say it that way, but I'm getting this out of, and this is what I was thinking too. Once the new administration comes into effect, I think we are, and I'll just say I think, I think all this data is going to come back and it's going to be not good. Now, right now, we're waiting for a huge amount of data coming out today on Wednesday. And we're waiting for this data. We're waiting for it. And do I think it's going to be good? I don't know. In the back of my mind, I think the data is going to be showing decent. I think it's going to be showing decent. I think it's going to be, we're going to see a lot of problems in the future. And I think it's going to be right around February and March. I think that's when uh, the crap's going to hit the fan. And I think we're going to be, our eyes are going to be opened. And we're going to be like, oh, whoa, this is not good. Now, the positive side about it, in the interview, listening to her talking about this whole thing, she had said the positive side about this whole thing is a recession only lasts about 11 months. So I really think that's not, that's a realistic thing. 11 months. And if we are, and we have been in a recession for this year, now keep in mind, data shows that we have to have this bubble burst though. We gotta have the stock market go down. We gotta have it drop down. And the reason why, and a lot of people are going to disagree and they're going to put comments. I don't care. Put comments down there about this whole thing. What is going to happen is once we have that market drop down, we're going to see the housing drop. We're going to see the stock market drop. The new generation, and I think I said this in my last previous video, the new generation is going to come in and they can afford to buy stuff now. They can afford to buy a new house. They can afford to buy a new car. They can afford to buy shares of Apple, Intel. They can afford to buy those things. They can afford to buy on those things because if we're having this bloated system, it's not going to be good. It's not going to be good. So I don't see a, a problem of us going down. I see as a problem of us going up. It's going to be a problem. Now, what I would like to see, and a lot of people would like to see it go down to 20%, 30%. We need to have a decent crash, you could say, and it going down. Where is the best safe where it's at right now? Where is the best safe on the money? Well, right now, cash. Cash is king. You can put money into cash. Uh, TLT is another option, and I have been putting money in there. I have been losing my butt off of that in one, and you can sit there and like look at it. TLT is not a great one right now, but I've been putting more and more money in there. You're still getting interest, you're getting dividends on that, so it's not a bad one to keep on putting in there. I think that's going to come back up, and when we see it come back up, we're going to see a big, huge hurrah on that one. That said, we need to see the Fed keep on lowering down interest rates. And the Fed is spooked out because they're sort of like, oh, we printed way too much money. And so they're trying to decrease that money. Now, keep in mind that we have printed more money than we ever seen. But a lot of the government is blaming the citizens, blaming all of this money onto the stimulus money, all that stuff. I don't think that's fair. I really don't think that's fair. I like you can sit there and say that the stimulus money has bloated the system up. And yeah, it's true. It's true in a way, but the government bloated the system up in multiple ways. You have the government spending money into multiple areas and keeping printing money into multiple areas where we should not keep on sending more money into these programs when people are hurting right now. So the best bet for us to get out of this and to help the government out, and the government should be not printing more money, is not giving us another stimulus money, is what I was saying in the beginning. They should just lower down taxes, bring the tax level down. Lowering taxes to the individual will be a stimulus onto itself. It's going to be a big stimulus to the economy. And then having that would not bring into inflation. That would help out the individual people and it would help out actually the governments too. So it's a win-win situation. I think we need to have this come into play. We the other option no one wants to talk about, no one wants to bring up, is bringing the inflation and the interest down by reprinting and bringing the printers back onto the federal treasury. The treasury can print money. It's totally fine. There's two people that can print, or two places that can print money, and that's the reserve, and that's where everything's coming from right now. And then that's the treasury. Well, the treasury can print money and put the money into the and slowly make it cheaper interest on it as well. This is another option no one wants to talk about. No one wants to bring that up. That will help us out in the economy. Now, what I think that's going to happen is I still think the market's going to still going up. We're going to see the Santa rally. We're going to see the Santa rally going up. Heck, we only got like what, 4 more weeks onto this year. 4 more weeks or 3 more weeks, I guess you can say. 3 more weeks on this year. And they're going to want to see the Santa rally. Everyone's like, woohoo, Santa rally. Come on, give it to me, the big jolly man. I think that we're going to see the Santa rally happen. January, still going to be floating. I'm positive. I am a little bit positive. I think January is going to come around. It's going to be good. February, I think it's going to be a little bit hesitation. And I think the hesitation is going to be there. March, I think then that's where all the data is going to come out. They're going to have the correction and they're going to be coming out and saying, this is all the problems we had. These are all the issues that we had. But they're going to be blaming it on to the new administration. That's why I'm thinking, because why we are saying that we're not in a recession. Now, the GDP has been, it was negative 2 times. And before, that was a recession. Now, if we go back, that was in 2023, 2 quarters, and that was your first quarter and second quarter, I think was 2023, and we were seeing a negative GDP. Well, that was not a recession, they're saying. They are changing things up and then moving things around. So I think we've been honestly in a longer recession than we have been in a while. And I think we're into this recession inflation, and it's really hurting a lot of people. So what I'm putting money into is right now, I'm putting money into the TLT. I'm putting money into that, in those bonds. So they are a government backed up bond and it's a 20-year bond onto that. I think those are going to be they're going to be decent. I think we're going to see some good returns in the future. Right now, they ain't good. They ain't good. I know that because I put money into it, and I'm like, ugh. I'm getting like beat up here onto people telling me how it's. People are saying, well, how's your bonds doing? I hear that, and I'm like, I'm getting beat up here. What I have to say is, I'm holding on to it. As Warren Buffett always says, if I lose money, it's when I sell the stock. I haven't sold it yet. So yes, I have right now lost, but I haven't sold it. And I'm putting more into it right now. And I am putting a little bit more into that because I think that we're going to see that recovery coming back. And I think it's going to be good to see that. Now, the shorts, I think the shorts are scared, honestly, because the shorts have been in this area of we thought that it was going to be shorting, we thought it's going to go down, and they got basically beat up, and they got beat up hard. So I think the shorts are scared unless there's something that's tragically a data switch, and that's what I think it's going to be. The job openings are not going to be it, but I think it's going to be the unemployment. I think that's going to be the key onto the market. I think the unemployment is going to be the key because that's what we're all waiting for. We're hearing that the unemployment is going up. When the unemployment goes to a certain level, everyone's going to be saying, oh, we're officially into a recession. And I think that's going to be where I'm focusing on. I'm focusing on that part. And when that happens, that's when we're going to see the yields starting to drop. We're going to see the stock starting to drop. We're going to see those things starting to drop. And I think it's going to be a fast a roll not roll plug yank off the market, and we're going to see a drastic stuff happening. Now, will I be hedging onto this? Yes. Oh, of course I'll be hedging onto this. I will have some plays. I will have some stuff coming in, and so definitely follow me, subscribe, and I'm just going over on what I'm looking at, what I'm seeing in the future. So a there is plays that we can see in the future when the stocks are dropping, we can still make money. And so definitely subscribe, comment what you think is going to happen in 2025 because I'm sort of very bearish onto 2025. I'm bullish right now. Go figure. I have a lot of longs, but I'm bearish for next year. I think that's going to be not a good scenario. Now, after we get this we role play. Oh my gosh! After we get this down um, turn, I think that we're going to see a lot of beat ups from the Bears because of what happened for 2 years. These Bears have been getting the crap beat out of them 2 years. And then I think that we're going to see the Bulls getting the crap beat out of them too. It's going to be this consolidation mode. We're not going to go much, it's not going to go whoop high very fast. It's going to be a lot of, oh, we just made it. And I think that's where we're going to see. When that's going on, I have some plays that I'm going long term, and I am going to go long term onto these ETFs. And these ETFs are a pretty good ETF, I think, that you can get some dividends out of them, and you can get some money from the options as well. So a lot of people, a lot of stockbrokers, they don't want to talk about, you can make money off of options, but they don't want to say that. They want to stick you in these ETFs or mutual fund. And I think that's a thing because of they want to have the commission. And that's basically it. I get it. You want to get the highest commission, so they were looking for the best interest in their commission. So what I think that you're going to see is something's going to happen. Um, it could be today. I don't think so, and I could be wrong. I could be losing a lot today. I will update you, and definitely subscribe and follow. I appreciate it, and have a great and awesome trading day.